Okay, welcome to this part 3 of Module 10, where we're going to go through how to actually set up your price ladders to trade these central bank events. So we're looking at how to set up your price ladders. Um, and obviously, we did go through in the previous part of the module, actually specifically what we're looking for and how we were looking to plan for these events. And in this specific part of the module, I want to go through something very specific. So if we just kind of break down the process by which we actually trade these central bank events, it generally you can just put it down into three easy steps. So if we just say the first step is to plan, our next step is to gather information, and then our final step is to execute trade. So we've kind of talked about the whole planning aspect, which was a very in-depth part. Um, and we want to know how we can best execute our trades. But first, before we understand how the best way to execute our trades is something we're going to look at a little bit more detail in the examples. Um, we need to try somehow to optimize this. So we want to optimize our gathering information or information gathering. The only way we can actually do that is two ways. We've got to maximize our speed, and we need to maximize our market information. So what do I mean by that? Obviously, speed's self-explanatory. You just want to make sure you're as quick as possible when these events come out, or the information that you're potentially trading off of comes out. We want to make sure we can execute as quickly as possible. Um, and we want to be able to read the information as quickly as possible. So that's also very, very key. So it's all about how you set up your workstation and your trading environment or arena, as you could say, as you're going into battle, to make sure that you can read everything as quickly and as efficiently as possible. And also, you want to make sure that you're gaining the maximum amount of information. Now, this information, really, you can break that down. I mean, that could be order flow. That could be, your Reuters dump that comes out. So your Reuters, this is your fundamentals that actually come out into the marketplace. This could be, reading the correlations in the market. Whatever it may be, you just have to make sure that you're maximizing that market information. You're gaining as much information as possible, but only make sure that you have to obviously make sure that it's the important information. You're not over overdoing the information and overloading on information that's not actually going to help you. So the way we're going to set up our ladders is to make sure that we can have uh, basically have the market leaders um, somewhere on our screen so that we can definitely see how those are moving, because that's going to affect the markets that we're trading. We might be actually trading the market leaders, but if let's say we're trading a lagger, it's always important to watch the market leaders and identify what they are. So very, very simply, let's just say um, if you're trading, say if you're trading the ECB, so for example, let's say we're trading the ECB. The markets that we want to be looking at are the euro, so we'll probably put that against the euro USD. We want to be looking at our core bonds. We want to look at the bunds, so bunds, OATs, the OATs, the French 10 years. Peripheral bonds, if there's any peripheral versus core spreads, we want to see what's going on in the BTPs, for example, very, very liquid Italian 10 years. Again, equity indices. You're going to look at your Euro Stoxx 50, for example, your DAX. These are the markets that you want to be looking at. And then, of course, your RIBORs. Now, out of these markets, the ones that are going to give you the most information about what's moving, and if you had to put them in sort of an order, I would probably say your leaders are going to be these. So these will be your leaders, your RIBORs, because they are short-term interest rates and they move really quickly. Anything that's in the shorter end of the curve, the bond space, they're leading. So these are going to be leaders. The bonds are all leaders, and your laggers are, unfortunately, for those of you that do trade equities, are or fortunately, sorry, for those who trade equities, are your equities. Um, and if you're trading equities, for example, it's important to understand that, you know, what the euro does, how the short-term interest rates are moving, and then how the bond space are moving is going to affect the equities. Always remember, the bonds are always right, and the equities, or at least so far in financial markets history, the bonds have always been right, and the equities are always lagging. So always the bonds and specifically the short-term interest rates are the ones that are going to give you the most market information. And then obviously the euro, because there's so many market participants trading it, that can give you a very, very big clue as to how the market's actually digesting this sort of information. So then obviously if with that same sort of logic, if you're trading the Fed, you want to be looking at your dollar. You definitely want to be looking at your T-notes, the treasury curve, and then of course your euro dollars, not the euro, but the short-term interest rates. Again, short-term interest rates. This is super, super important, guys. I mean, I can't stress enough. This is going to be your absolute leader. Then after that, your T-notes, and then your US dollar. And if you're looking at the equities, for example, if you're looking at the S&P 500, that is by far going to be your lagger. And in most cases, a gray area to trade sometimes, just because they kind of follow what these markets are doing. So understanding which are your leaders and which ones are going to show you the flow that you can make sound decisions off of. And then on that same logic again, if we were to do the BOE, you always want to have your pound up, obviously your gilts, and then again your short sterling, which is again a stirs. Um, so very, very same logic. Again, leader, and in that order, short sterling, gilts, and then the pound I'd probably be looking at for clues on how to trade that. And obviously the lagger, you'd have your FTSE 100, for example, if you were trading the FTSE. So let's actually look at how we would set these ladders up really quickly. I'll just minimize this. So I've put together a couple of workspaces, and this is in the trainer environment. So these are all sims. I'm recording this on Thanksgiving actually, so there's actually quite a few markets that are closed at the minute. But yeah, let's just open up the first one that we were looking at is the ECB. Let's just wait for that to load for a second. And so yeah, just basically what I was saying before, it's really, really important to make sure you're maximizing your information and maximizing your speed. So how would we potentially maximize our speed? So the ladders that we're looking at, the main markets, let's just say, for example, that the main markets that we wanted to trade, I've got here the Bund, I've got here the Euro Stoxx 50, and these are the two markets that I want to trade over the ECB. So this is a workspace that I would use, for example, over the ECB. So I'd be looking at the Bunds and the Euro Stoxx. If I was looking at the Bunds and the Euro Stoxx, I would make sure that the screen above, let's just say I had my Reuters above. So my Reuters is above. I would make sure that the news or whatever screen dump that's coming out would be directly above the main markets that I'm trading. So obviously it's not going to be on the screen, but my news or the information that I want to trade off of has got to be directly above, so that if I'm looking at the Reuters that's on top of this screen, and I'm reading the information that comes out, as soon as I see something that's important, I can quickly react and, let's say, buy at market, sell at market, whatever it may be. So the important thing is actually having your Reuters or having your Bloomberg or whatever platform you use. If you're using some sort of platform, make sure that it's closest to the core markets that you're going to trade. So, you know, these two right here would be the core markets that I would trade, for example, over an ECB event. Then I would have, let's say, my 2-year German, my 5-year German part of the curve, and the 30-year. So the Schatz, the Bobble, and the Buxel. And that's so I can read the flow across the curve. I know what the shorter end is doing, what the belly of the curve is doing, and what the longer end is doing. So, for example, if I'm seeing a bid up, let's just say they've announced a big easing program with stimulus package, and they're targeting the shorter end of the curve, and you see the short end of the curve goes bid very aggressively. You know, the short and the belly end of the curve goes bid very, very aggressively, and I'm trading the bunds, and then I can see for some reason, you know, my 30 years having a problem. It's not really bidding up as it should be, and in fact, there's actually quite a few offers coming in. I'm seeing the longer end start to sell off. If I could see that kind of information, well, then I might be looking, if these two markets start slowing down in their bid and actually start going offered, well, I'm going to be looking to potentially sell my 10-year Bund. Whatever it is, I need to understand what's going across the curve. So understanding, if I'm trading bonds, I'm looking across the curve. So that's the kind of information I want to have there. In this lower end of the corner, if you know, I'm reading the order flow, if there's some sort of indication of a rate cut or a rate hike or any sort of information like that, I need to be looking at my Euribors, and that's going to give me the flow on the shorter end of the curve, and I can see what's happening on the very, very short end of the curve. And you can see from the flow in here, if these markets, for example, if you could see that there was a bid and all of a sudden these markets started having trouble going up and they started offering down, well, then I might have an advantage, maybe a 2 or 3 second advantage, to actually get short on the Bund. So whatever it is, you need to understand that your short end of the curve is going to be your leader. Then you're looking at your bonds, and then obviously your currencies. So the currency, as we just said, we've got the Euro USD here. So I need to see what my euro is doing. Obviously, if I'm seeing the euro come off, then that's going to give me an indication that there's some sort of stimulus package or whatever it may be. If there's something hawkish, then I should see the euro start rallying. Conversely, like I just said, if the stimulus just go to the downside. And then obviously if I'm trading my equity markets like the Euro Stoxx 50, I want to also take a look at maybe another European index is doing, the DAX. Looking at the flow in the DAX, obviously it's a lot thinner and the flow is a little difficult to read. So I know a lot of traders that trade the DAX. I'm not a DAX trader myself, but those traders that do trade the DAX watch the flow in the Euro Stoxx, because the Euro Stoxx is very thick and has a lot of heavy flows going through the day. And obviously, like I said before, I might not be trading it, or I might, whatever the case may be, I'd like to have a 10-year BTP up, so to see the periphery and how the periphery is performing versus the core market. So I don't have the OATs up, but maybe in a scenario where I thought the OATs would be important, I'd have that up. And I'm making sure that I can see what's going on across the curve and across the different European bond markets. So one thing, and I've made one mistake on this, one mistake I'd say in this setup so far, and I'm wondering if maybe you guys could notice it, but like I said before, we want to try and optimize the information we're getting, and the importance of screen real estate is I can't even stress how important it is to arrange your screen real estate and make sure that you're optimizing your information flow. So there's one thing that I've done here. If you take a look right here, this is something that I wouldn't do. Usually I would put this ladder over this ladder, especially if I'm not intending to trade the Euribors, even just to add another 4 or 5 ticks worth of information on these ladders could mean the difference between seeing potentially a big front run. If I couldn't see, let's say, these three prices, and then at some point, we were trading, and then I could see like a 200 lot on the bid at 105.99 or 106, the figure. If there's a 300 lot there and I can't see it because for whatever reason I forgot to maximize my screen, or my market information for that market, and let's say it was trading like this, and just below there was a 200 lot, and I couldn't see it just because I'd left this little bit of really unnecessary ladder space. And now you can't do that to the upside, but at least here, you know, in the middle, you don't want to be wasting that space, and maximize the information that the market can give you so that you can take decisions off of it. And I know it seems a little bit meticulous or too meticulous, but at the same time, this could be the difference between an average or a bad day to good or a great day. It's really, really important to make sure you're maximizing the information that you're getting from your screens. So that's an example of, let's say, how I would set up my ECB ladders. It could differ from event to event. If I was trading the 5-year part of the curve, the bubbles, then I would make sure the bubble would actually have a full ladder from top to bottom so I could see the flow across it. But if I'm not trading it, I just want to watch the flow, I'll make sure that it's somewhere so that I can see it, but not necessarily the whole thing. If that was the case, maybe I would split the Eurostoxx space, have this kind of halfway like this, and then maybe put in the bubble somewhere here, for example, and increase that just a little bit to get a little bit more information out of that. Whatever it may be, I could rearrange that accordingly if I saw it fit, depending on how I was trading it. And now, obviously, again, just to make sure you guys understand, if my fundamental screen or my Reuters or Bloomberg was not on top, but it was actually let's say, for example, to the right of my screen. So if I had my Reuters, to the right of my screen, I would make sure the main markets that I'm trading are right next to that. So let's say I would put my Bund here, I would put my Eurostoxx 50 here, and then, the more important markets are closer to the information so that I can read the information and then act. So read and then act accordingly. So that's how the structure and the process that I'm going through mentally to set up my ladders before an event. You want to maximize it and not have to think too much when you have to make a decision. You want to know where everything is and understand how you're going to read the flow when it comes out. Okay, that's, for example, how I would set up my ECB. Same logic if I open up my workspace for the FOMC. Again, notice I've got, just quickly select these here. There you go. So you can see I've got my euro dollars to the downside on the bottom here. This is my, let's say, my deck 15, my deck 16, and the deck 17. So I'm looking at how the market's pricing in at the end of each year, certain interest rate expectations or whatever that may be. I want to see what these markets are doing because, like I said, the euro dollars are going to lead, and I actually give myself probably more space than the Euribors because obviously now we're looking at potentially interest rate hikes in the US, and these markets could actually move quite a bit. You could see them move maybe 10, 20 basis points. That's like 20 or 40 ticks, which is quite a bit, and you want to see what the flow is going on in here because this will give you what's going on in the rest of the curve. So for example here, if I wasn't trading the bunds, I would put them all the way to the side here, and let's just say I've got my Euro USD here because that's something potentially I wanted to trade. I've got my 10-year T-notes, or sorry, these are my 5 years. Mistake there. 5-year T-notes. I've got my 10-year T-notes here. I've got my S&P 500 here, and then I've got the 2-year and the 30-year. Again, I want to read what's going on across the curve. I want to see the 2 year and the 30 year, like I said before, the relationship, and if there's seeing any inflation expectations, if there's an offer in the 30 year, or if maybe we're getting sort of deflationary fears, and I could see maybe the 30 year actually bid up a lot more than the 2 year. Um, so really, you're looking for growth and expectation, um, growth and inflation expectations. You can read that on the longer end of the curve, and then everything closer to like the interest rate policy, you can read better in the shorter end of the curve, and that's going to feed into our decision making. If let's say we're trading the 5 year, because I usually trade the 5 year as one of my main markets for the FOMC. The 10 year, I don't trade as much. I like to trade the belly because it's really, really good flow, and you can see that order flow come in really thick and fast. And then again, you want to have a dollar product up. You could have the dollar, you could argue maybe to put the dollar index up, which is also good to see. But no, to be fair, about 70% of the dollar index is pretty much made of the Euro USD. So you might as well just have the Euro USD. There's a lot more flow to read. So in terms of price action, you can read that a little bit quicker. So again, similar sort of setup, maximizing. Notice I don't even have, usually I've got maybe a little risk box here, maybe my order book here, risk or order book. I don't even have those now, and I've just got to mentally take note of my risk, and I'll let the risk manager take care of that. And the order book really, it's not really going to add as much value than actually reading the order flow in the middle of an event. So I don't even have the risk or the order book up. I literally just have as much information from the ladders and from price action as possible on my screen. So that's, for example, what I would look at on the FOMC. And then obviously, again, if we just have to look over at Bank of England, very, very similar logic. Again, I would have my short stirs, the bottom, which is the short-term interest rates. Again, I want to make sure I'm looking at these and watching. These are leading. Again, the same exact scenario. And I know I'm sounding quite repetitive now, but I want to make sure for those of you that don't watch this, it's super, super important, guys. And just I want to make this sink in as much as possible. Those traders that are really good at trading these risk events understand the implications of having the right markets up. So then I would have my main markets, my gilts, the FTSE 100 here in the middle. So let's say I'm trading this market and this market. I still have my bunds. It's still a core market of mine. I always have that in the side just to take a look at what it's doing. I've got my Euro Stoxx 50, so I could see the correlation between the Euro Stoxx and the FTSE 100, seeing how those markets are moving together. Then obviously, instead of the euro now, I've got the GBP USD. Watching the flows in that, understanding how the pound is moving. Obviously, the moves in here are a lot more violent and quick. So, reading the price action in the pound can be, you can give you a heads up on how to trade some of the other markets. But obviously, like I said before, the short sterling is always going to be more institutional, a lot more of a leader, and you get a lot more retail market in the pound. So sometimes you get overextensions, or you get false moves initially, you get blips one way or the other. So it's just quite important to understand the importance of having this up. And then this is our WTI crude oil market. You could obviously have the Brent oil market up. The reason why I have this up over here is just to have something from the miners of the oil and gas industry, because the FTSE is predominantly made of miners and oil and gas. So I can see if I could see what's going on in oil, or let's just say maybe I would have maybe split this and had oil up here and then copper at the bottom here, or maybe even a gold ladder, just to see something of what the commodities are doing in the oil and mining. When these, if Usually when oil or generally the commodity complex rallies really hard, you'll see the FTSE 100 outperform, your Stocks 50 or the DAX or any other markets because that's predominantly what it's made up of. So just understanding the market correlations, understanding which markets to keep in mind when you're trading these events is super important. And like I said before, you want to make sure you're optimizing um, the information gathering so that when you execute, you can execute swiftly and effectively, and sticking to the plan that you've made initially. So thanks very much, guys, for listening to this. In the next part of the module, we're going to be going through how to actually execute profitable price ladder trades. So stay tuned, guys. Bye bye.